Good morning, everybody. Welcome to the game plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. We're going to go over trade opportunities, the big movers in the morning, the macro data, what is going on in the markets, commodities, crypto, and stock market. We'll cover it all. All right, first and foremost, markets are looking a little bit weaker today as the markets is still tentatively worried about the Middle East. Is there going to be further escalation? Is Israel going to retaliate against Iran here in the coming days, as they've said they would? So the markets are going to be kind of hesitant today. We are seeing some good news from NVIDIA. Jensen Huang, the CEO of NVIDIA, came out and said that insane demand has been seen for the Blackwell chip. All right, so again, NVIDIA is up a couple dollars this morning, keeping the markets somewhat from falling off a cliff. If you looked at the markets without NVIDIA, it wouldn't be a pretty sight. But let's go into things right over here. We'll take a look at the pre-market action. And what we could see here on the S&P 500 or the SPY is that we are seeing initially a down move. This was at 4 in the morning right here when the SPY began to trade. We saw a gentle float up, but now we're starting to see a little bit of downside coming back into the markets here. So we are net negative. This is where we closed yesterday. So we're not down a ton. It's not like the markets are falling off a cliff, and they shouldn't be, right? So yes, you have concerns about the Middle East, but the markets are also looking forward to that non-farm payrolls number tomorrow morning at 8:30 a.m. When you think about economic data, folks, there's 3 reports a month that are the biggest ones. You have the PCE data, which is inflation data, CPI, inflation data, and the non-farm payrolls report. So tomorrow is one of those 3 top reports for the month, and we'll get that information at 8:30 in the morning. Now, we did get jobless claims this morning. Jobless claims were expected to be around 222,000. So we'll write that in, 2, and 2. That was what expectations were. They came in at 225,000. Now, that's virtually in line with estimates, so there's nothing to see here. No reaction whatsoever of significance in the markets pre-market, as again, it just turns that attention right to that non-farm payrolls report tomorrow morning. All right, let's go back to the charts and see what is moving today as we get into the action. And we did see Stellantis, which continues to see selling pressure here. If we take a look at the chart, we can see that this stock is down again today, trading right around 13. Now, if we flip over to the daily chart, look at how much downside this stock has seen here just since April and May in this market. And again, this is Chrysler, this is Dodge, Ram, all of those type of vehicles. That's what they kind of do here. So again, they're a automaker and essentially shipping out those autos, and they've seen lots of lack of demand, I should say, consumers pulling back, partially interest rates, because interest rates on vehicles are now high, and then also the consumers struggling. We know that, and that is causing an issue here. So the key today was that the CEO said that he's not sure if they're going to be able to pay the dividend, and that's causing further downside. Now, if we go back to the chart, there are some key levels to watch. As a day trade today, I'm going to keep a very close eye on this 1285 level. 1285, there's a little pivot point right in there. That's going to be potentially a day tradable level. On a swing trade basis, if this keeps falling, you get to about 11.5, and there's this major low right here. That, to me, would be very, very interesting. All right, so that's your update on Stellantis. Watch those levels here in the morning session. Let's take a look at Tesla here, guys. Tesla is under pressure again today, coming back in after Bernstein, which is an analyst firm, basically said that the growth for the EV market was going to be so small, like under 10%, when it was expected to be like 30%. And that is, again, causing issues for names like Tesla, because obviously their numbers are shrinking. Even with discounts that they're applying to their vehicles, we're still seeing demand for EVs come down sharply. Now, this leads us into the trade of the day, which I promoted here on the thumbnail, folks. I have an idea, and it's just an idea, but I think it makes a lot of sense. And we're going to go here to the chart and take a look. So follow me over here, guys, and we'll take a look at the chart here. The name is Carvana. Now, the reason why, and notice how I kind of draw my ideas and connect the dots. So the idea is Stellantis is struggling, autos, right? Tesla, EVs, autos, struggling. You go to real world experience. I have people, traders in this office that have gone and bought a new car or leased a new car, and the auto sellers are like, man, it's been a ghost town around here. So it's not just EVs, it's the whole auto sector. All right, so again, you could make the case, oh, it's only EVs, but that's not the case. So Carvana has a totally different business model than, obviously, an in-person experience. It's all about buying online, but it doesn't change the fact that there is a slowdown in the auto sector here. And by doing that, we then turn to the chart and we say, okay, look at this amazing parallel channel right through here, and we're right up into that level. So if you look at Ford's chart, so Ford Motor Company, it's down here. If you look at Stellantis, it's down here. If you look at GM, it's held up a little bit better, but it's gone down as well. My thought process here, connecting the dots, is that Carvana may see some downside today and into the next few weeks and even the next few months with earnings coming out in the not-too-distant future, at least potentially a downside to this 134, 135 level, which would be the low end of the parallel. So you're using a combination of fundamental analysis as well as technical analysis to isolate down a potential good trade setup. So that's my trade of the day today, guys, that I wanted to cover with you guys as we look to see if the auto side of things starts to get a little bit slower. Now, another stock getting crushed today is Levi's. All right, so if we turn to the charts here, look at Levi's drop. Amazing drop here on this stock, down, I think it's about down 13% on the day, trading at 1860 or so. And if we flip to the daily chart, we can see that there are a couple levels coming into play. So first level on a day tradable basis, there's a gap fill here at around 1810 or the 18 even number, followed by additional support at around 1780. So that's your zone for a potential day trade. Then if it breaks through that, needless to say, double bottom at 1650 would be an epic technical level. Now, a couple things to go over here. So Levi's came out with earnings yesterday after the bell, and they said that they did okay on earnings side, but their revenue missed. And again, they're struggling. Why? Because the consumer is struggling. And again, if, jeans, whatever it may be, if the consumer is struggling, we're seeing that be an issue here. Okay, so that's a little update on Levi's. Again, so we've had some movers here. We have Levi's, we have Stellantis, we have Tesla inching down a little bit this morning after that Bernstein note. And then really we had Constellation Brands report earnings today, STZ. If we take a look pre-market, you can see the stock's down a little bit, but it closed yesterday right around 256. It's at 250. On a $200 stock, that's not enough to get me excited, nor to spend time analyzing the chart. It's just not a big enough move. Remember, good day traders focus on what's in play. If there's no action, you're going to get caught in the algorithms and the different computers. And they're just trading back and forth. And they're just waiting for retail to kind of try to figure out a move here when there's not a move. You have to play. If you're a good day trader, you play when other retail is playing, when there's panic or there's fear. All right, when there's nothing going on, it's all computerized trading at that point. It's just people trading or computers trading back and forth, and you will get chopped up and you'll lose your money. So remember that, folks. Focus on what's in play. There's a reason why I focus on those in these game plans. It's because those are the ones that there might be trading opportunities in. All right, let's go into some crypto action today, guys. As we go into Bitcoin's chart here and we flip back to the daily chart, we can see that Bitcoin continues to struggle right here at the pivot point. And again, I've talked about this pivot point for months now as being a major level. We can see how, again, it came up, hit it, pulled back, broke above it, and now it's retraced into that level. As long as it holds this 60,000 level, Bitcoin can rally to 68. If it breaks and confirms, 52,000, maybe even 49,000 is potentially in play. Now, I do have a trade, so I entered 4 new trades in the crypto service today, Smart Money Crypto. I'm going to give you guys one of them here. So if we take a look at this chart, look at this nice chart of Chainlink. Chainlink, downsloping trend line, upsloping trend line, X marks the spot. That's a starter position for me. Now, notice how I'm saying starter position. It's not an all-in position. I never do that, first of all. But even when I'm looking to accumulate, let's say, a 5% of portfolio or 10% of portfolio, I always start small. Why? Because I go into a trade thinking I might be wrong. It's a much different concept than most people. Most retail goes into a trade thinking about how much money they're going to make, how many Lamborghinis they're going to buy, whatever it may be, and it makes them go in too heavy. Well, when you go in too heavy, you get handcuffed. You can't maneuver. You can't dollar cost average. You kind of, emotion starts to creep up. And this goes into that next point I made in the thumbnail today talking about emotion. How to keep emotion out of it. There's a couple ways. Lower share size or coin size basically, if you're dealing with crypto, or commodity size if you're doing commodities. But lowering that means that it's not going to be so emotional, meaning that every little up or down is not going to make you freak out, which makes you then susceptible to doing what the institutions want you to do, which is freak out and exit your position or FOMO in, right? So think about it. It's a game. It's a game. The institutions are playing games with you. They want you to go heavy. They want you to think. They want to use your emotion against you so that you over-leverage yourself, which means they can push things in a certain direction, make you freak out, exit for a loss, and throw in the towel. The lower your share size, the more you're just like, you know what? This is the chart. These are the facts. And when you follow the facts and you have the normal share size or the normal coin size, you follow the charts because you're not freaking out. And you say, no, that chart still looks good. It still has these factors to it. That's the key. In addition, education. The more you study charts and you see that every time or 80% of the time something happens, X, Y, Z, or a price comes into the X marks the spot, or it confirms above, and then it retraces to the scene of the crime. All the things that I teach in these game plans, when you look at those, right, and you see them working over and over again a high percentage of time, you begin to trust it. And it takes the emotion out. It minimizes the emotion. And that's the key. So education and proper position size. Those are the keys to limiting emotion, which then makes you able to weather the institutional games where they'll push things to extremes when you have a good position on the table. All right. Let's get into other things here, guys. We're going to jump over to gold. Appreciate you guys lasting there with me in that little bit of a rant there on some keys, but I do think it's an important factor here. If we take a look over here at the charts, we have gold. Gold is right up into this level. This is my 2660 level that I've talked about for quite some time. That so far is holding suit. It's still holding. Granted, we have to be open to the possibility that tomorrow's jobs report could trigger a big move in gold. But remember, if it confirms above right here, then you have your next upside move. My next little minor target's around 2710. But again, as of now, you trust the level until proven otherwise. Always remember that. A lot of us, because especially when we over leverage, we're like on pins and needles, like, oh my goodness, it's going to break. Oh, what if it does? And it starts to make us emotional and react emotionally, which makes us do the wrong thing. So like tomorrow on the jobs report, gold could go like this. Initially, a lot of people freak out. They exit a short, and then it reverses back down. And then when you look at it later, you're like, oh, crap, I got whipped out of the trade. We've all had that happen to ourselves. I've had that happen to myself as well. But the point being is if you have a normal share size, you can weather that storm and you wait patiently because you know the confirmation signal, you know the other factors out there. Very, very important, all right? Now, we'll quickly go over a couple of these other charts here. If we take a look at silver, I'm still in the camp that silver is due to pull back here. So let me just take a look at this, see if this is the chart here. Yeah, so for the most part, I'm still looking at silver pulling back to about the $30 or just below level. We have broken above here. We did hit double top up in this range, but I'm still thinking we come back into this area here, which would be a classic retrace to the scene of the crime. Now, let's look at oil. Now, oil is still holding up, but this is the kicker. Oil, yes, it's creeping up, but look at how it's still holding underneath that line. So this is a perfect example where emotion can get into play, right? So if we take a look at the chart here, we can see that the chart tells us something. It tells us that this level is major resistance. But a lot of people would be emotional right now. Oh my goodness, and I'm talking if you were short oil, right? I am not short oil right now. I am short natural gas, not oil. But the point is, if you're short oil, a lot of people would be freaking out and potentially getting out of their short because of what's going on in the Middle East. Yet if you just do a normal share size, you would say, wait a minute, this line is still holding. It hasn't broken yet. Therefore, my probabilities, just strictly probabilities, are that you'd have downside here at some point. Now, is there a chance that there isn't downside, that it goes up? Yes, of course there is, right? In which case, if it closes above and then confirms, now you say, okay, it's been confirmed. Bias now flips, probability flips to the long side. At least you know, right? That's the key. But big position size, as I talked about before, makes people start to freak out. They're like glued to the news. And if you're watching the news, it doesn't matter what station, by the way, the goal of the news is to sell TV spots. Now, if they were just telling you facts, how exciting is that? Well, it's not so exciting. Now, if they're embellishing and there's a narrative and there's excitement and there's, oh my God, did you see what's happened over there? And holy cow, we got to go over there. What are they doing? They're getting you to be glued to your TV. And so more people watching means they can sell more ads on TV. Remember, a TV station would be out of business if they didn't have sponsors or TV ads that were running. That's how they make their money. You have to think about those things. Very, very important. So the idea is watching the news actually is a detriment to investors, because it's going to basically highlight and accentuate a lot of things that create emotion so that you tune in 24/7. If they could have you 24/7, they would have you 24/7. Remember those things, guys. Really, really important. All right, let's go over a couple more things here. Let's quickly look at natural gas and just see what natural gas is up to today. And if we look at nat gas, it's creeping up. So it is creeping up, but it's not here at this point. It hasn't confirmed yet, and it still has major resistance up in this range. So again, yesterday I added to my natural gas. We talked about that right up here. So right in this range, brought my average up a little bit, and my next add would be right here. And then if we confirm above here, then you got to say, okay, now it's broken above this pivot high and confirmed. Now it's off to the races. But I'm just working my average patiently, unemotional, because I have my levels, I have my game plan. And if it breaks it, it is what it is. Stop out, take the loss, move on to another trade. Remember, you'll never be a perfect trader. Don't try to be. Try to find trades that are 80% success rate or better. Doesn't matter, commodities, crypto, or stocks. And just remember, that means 8 out of 10 trades you win or 7 out of 10 trades you win. They're always going to have your loser in the mix, but just get it over with and then keep going, because your longer term average is what you want to have. That's where you're going to get to the Hall of Fame. And in this game, Hall of Fame means multi-millions of dollars made. Whether you're a small investor right now, if you can keep up an 80% win rate, you'll get to that multi-million dollar level in no time at all. All right, follow me back here one last time, guys. Just want to say, as always, you guys are awesome. So amazing to have the support that you guys give us here at Verified Investing, to kind of encourage us to keep bringing things to light, to giving you, honest technical bias analysis. Just it is what it is. The chart is the chart. It doesn't lie. It doesn't BS us. It's not a narrative. It's not hype. It is what it is. These are the levels. This is confirmation. This is where it's proven that we're wrong. It is what it is. That's what we all have to realize as investors. So again, appreciate your support, the kind words, the comments, the likes, all of that stuff. Tell your friends, make us into something that can rival that nonsense that is spewed out there all over the internet, everywhere else, and on TV. We're here for you, and we're going to fight for you. Have a good one, guys. Take care.